Hey guys, welcome to another edition of the Exchange Traded Fridays podcast, and it's all about ETFs in the news, in the media, and just all over the place. So we are looking at the local and global markets, and we've got a range of things to check out. So let's get underway. So this week, this is for issue 3, August 6th, 2021. So if you've already been subscribing, we hope that you've been able to see some really interesting insights. If you haven't yet, then you can sign up at the ETFtracker.com.au page. Now, this is the read-through that we put out on Spotify and also on YouTube. So for people on YouTube, you can see as we scroll through what's going on with the newsletter. And for those that are listening in who prefer to do that, on the way to work, at the gym, whatever it is, then you can listen on Spotify, but also on our ETF Tracker page. So let's take a look at what happened, what was going on in issue 3. So it's another week of Olympics action, and our local Australians, they are sitting currently at 4th in the medal tally behind China, the USA, and Japan. We had a slew of medals come out this week. Here's a chart that shows where we're sitting. So currently we've got 17 gold and total of 38 medals there. So this is our best haul since Athens 2004. So there's still a few chances to win some more. Let's hope that we can get there. Just saw the Boomers and the Opals bow out of, Opals bow out of medal contention. That's the women's basketball team, so that's a shame. But the Boomers, who just lost to the USA earlier today, they're still in it. They can get bronze. So hopefully we can get that first medal for Aussie men's basketball. Back to local markets, and this week we saw some big news, which was Afterpay being acquired by US payments company Square for $39 billion. It was a bit of a coup for both the owners of that company plus investors. So also for ETF markets, because there's a few that have exposure to that, especially those that have exposure to the buy now, pay later stocks. So we saw Zip go up, Split go up. Everyone kind of just rise with the tide as there was that good news there. Globally, it was all about ETF flows as we saw articles highlighting more money going into ETFs than ever before, and more of that money going to active managers than ever before. So we also got a view on some of the thematic trends for those ETFs. And then we also had a podcast inception moment. So we were proud to be part of another podcast. So we'll mention that a little bit later, from TEP Investments. They're an up-and-coming bunch. So yeah, this is a bumper issue. So there's a lot of detail here, a lot of videos, and we hope that you are strapped in and ready. So before we continue, in terms of the newsletter, for those that read and subscribe to it there, or for those watching on YouTube, one of the bits of feedback we got was to have a bit of a page of contents. So we've now got all of the sections that are in the newsletter. There's a lot here. So they are the listen or watch kind of components that we have at the start, where we have the links to these Exchange Traded Fridays podcasts and videos. We've got the local articles, global articles. We've got a list of videos. We've also got the podcasts. We've added webinars this week. So there's a couple of webinars. So whenever there's something coming up in the next couple of weeks that we see that's been announced, we'll make sure that we put that there so that if you're interested, you can check that out. We also put up the chart of the week. We've got ETF Education, more on the ETF Tracker app, ETF Tracker forum, and obviously the socials where you might be already watching this right now. So as I said, you can watch on YouTube, you can listen on Spotify, and you can also check it out on the ETF Tracker page for more of that info. So let's get to the articles. The first one is up from Livewire Markets, and they go into why Square's $39 billion bid is only the beginning for Afterpay. So whilst it's not directly an ETF play, we do see quite a few ETFs with holdings in the Aussie buy now, pay later stock. ATEC has the biggest exposure with 18%, and we can see that with one of the apps that we've got at ETF Tracker. Other ETFs have lower amounts. And in this article, Ali Selby of Livewire and Joe Maggia of Lakehouse Capital go through more details there. So we click on that one. And we're just going to the article now. So if you're not already subscribed to Livewire, you really need to make sure that you get on board with them, because they've got some great articles from various fund managers and professionals in the investment space. So they go through the deal in a little bit of detail and what happened to Afterpay after that. There was some details here on whether there's support for Square's bid for Afterpay. So they basically spoke to Joe Maggia and they took a look at some of the further details. So he mentions that they're supportive. They think that the deal makes a lot of sense. Square brings scale, distribution, and structurally lower cost of capital that Afterpay would never have been able to match on its own. So while Square will benefit greatly from leveraging those strengths to enhance the value of Afterpay, that's why, in addition to being a lot of cheddar, it's an all-stock deal and not all cash. They also take a look at whether it's likely that any bidders will come out of the woodwork. And they also take a look at, does this put other Aussie buy now, pay later companies in play? Could we see further M&A? And basically, they've said that the deal validates the BNPL, buy now, pay later, kind of sector is here to stay. They also say that if I was a smaller rival, I wouldn't be necessarily thrilled to hear this news. Definitely take a look at this. There's quite a few charts in there. Lakehouse invested in Afterpay in early 2017, and they've got here a couple of big lessons that they note that are worth highlighting during their time as a shareholder. So lots to take a look at there, so definitely worth checking out. Let's go back to another Livewire article. In this case, it's a follow-up from Glenn Freeman. Last week they did, well actually this is also from last week, it came out on Friday, so I'm going to include it here because there was a megatrends themes to look into, and that featured various fund managers and CIOs, and ETF Securities Kanish Chugh was in there as well, but that was on the positive that we included in the newsletter. This is the themes to avoid, so what they call the fake megatrends. So if you jump to the ETF section here, what was interesting is that Kanish has said that some of the things that you want to avoid, basically, let's take a look here. We had this before. So COVID and remote working it's definitely changed corporate life, but it's not a long-term trend. So because there's going to be a balance between people going into the office and working remotely, it's something to just be careful of, especially if you're a long-term investor. It's great if you've been able to make some money in those types of stocks, ETFs as well. Get in and get out, but unless you think that is going to be a long-term play, it is something to be careful of, or maybe even avoid. So those COVID ETFs and the work from home, so definitely something to look at there. So another Livewire one, so great for the Livewire subscribers. Definitely take a look at that, and then we take a look at best ETFs. So this is the education kind of and insights section from Rusk. And in this one, Jazz Harrison talks about two ETFs that could give you some good growth in the future. So they are Quality, QLTY. That's the BetaShares Global Quality Leaders ETF. We've also got the BetaShares Cloud Computing ETF, which is CLDD. And that's the great thing about ETFs, that they have these ticker names that also give you a bit of a detail about what is under the hood there. So CLDD, cloud, it is cloud computing, and BetaShares Quality, so Quality, QLTY. So this is their preferred ETF of the two. So they talk about it first, and they say it's an investment that only goes for businesses that rank highly on a number of metrics. Those factors that they look at are return on equity, debt to capital, cash flow generation ability, and earnings stability. So essentially, these are businesses that make consistent profit, generate good cash flow, don't have much debt, and don't need tons of shareholder money to keep operating and growing. Now, the good thing about both of these, the BetaShares ETFs, is that if you want to take a look at the holdings, so we've got the ETFtracker app that looks at what the monthly trends are going back to 2017 with data from the ASX and Chi-X exchanges. But if you want to look under the hood for these BetaShares holdings, we've got both of these in our holdings analysis app as well. So you can take a look at that on ETFtracker. So that's those ones there. The next one is ETF Securities Weekly ETF Monitor for last week. So this came out on Tuesday this week, so only a couple of days ago. So you go to this page, they've got the ETF monitors under resources. So when you go to ETF Securities, go to resources and ETF monitors. And then you can see the one for the week ending 30th of July. So it downloads as a PDF. And when we take a look at that, I'll just zoom in here. The top of the page is all about performance. The next tables are about flows. So the best performing over the last 1 week was the Gold Miners ETF from BetaShares, followed by the Gold Miners ETF from Van Eck. So they likely have a couple of crossover names in there. So that's MNRS and GDX. They were 5.7% up in the week and 5.2% up. And the worst performer was a China AMC Asia ETF from Van Eck and the BetaShares Asia Technology ETF Asia. So it's CETF and Asia, down nearly 9% and down 5%. But that has bounced back a little bit. So make sure you keep an eye out on that. And it's very short term. So depending on what kind of investment style you're in, that might not really affect things long term, and something to definitely look out for. ETFs are definitely defined by what is popular across the ETF landscape. So it's important to take a look at flows, and we take a look at flows on the monthly basis, but ETF securities have these flows that they put out each week. So there's the year to date, there's what's happened in the week, and what is the last 12 months. So just in the week that has passed, the most money went into the iShares Core Cash ETF. That is BILL. That saw 40 million go into it. And then there's the BetaShares A200, the Australia 200 ETF. And that saw $34 million go into it. So definitely two that are worth looking at. So if you want to look at that, that's from ETF Securities, and that's their weekly monitor. And just going back to the newsletter, another one that I thought I would put in is this AFR Wealth Generation story about Open Markets Group doing a bit of analysis on meme stocks. And this is important because in the ETF world, often you will find that if you're interested in getting exposure to a certain type of stock or asset, you'll go through it via ETFs. And it's important to look at what's under the hood, because some of the stocks that may have been popular or memeing in terms of their peak kind of hype on Google Trends or Reddit, some of them might not perform that well over the long term. And so this AFR Wealth Generation article, it actually comes out as a newsletter, and I've got that sent to myself here, so you can take a look at that. But also you can sign up for the Wealth Generation newsletter over here. So there is a link to the AFR's Wealth Generation sign up page. But if you type in AFR and Wealth Generation, you'll be able to see that. It was also out in the Australian as well. So you can see that story there. I'll just see if we can, let's type in meme stocks. Here we go. So meme stocks create more winners than losers. Looks like I need to just log in, so I'll just do that. Hopefully very quickly. Still got my old email address there from work. Old work that is, but that's okay. All right, so let's take a look at this. So the ASX listed meme stocks are proving a cash sinkhole for most investors, hoping to strike it rich on the market. New research shows that the most popular speculative stocks are on average lose 1/3 of their value within 3 months of obtaining meme status. So if you're not familiar with that kind of stuff, I guess the best example would have been GameStop, which saw its share price lift by 1,500%. A lot of people who hadn't even invested got into the markets, whether ETFs or looking for other speculative names like GameStop. They saw it from the popularity of all of this. And so Open Markets Group, OMG, took a look at Reddit, took a look at Google, and found quite a few stocks where in the run-up to some of these names, such as, say, 88 Energy, Doe, Digital Wine Ventures, in the run-up to their being popular on, say, Google Trends and the amount of mentions on Reddit, they saw that the price would run up for many of these stocks, going up 200, 300, whatever it was percent. But in the aftermath, after it has hit peak meme, it's had its memeing, basically those stocks would drop by up to 1/3 or even more over longer periods of time. So definitely worth making sure that you understand what it is that you're buying into, and just be careful that just because your neighbor, your mates, or someone that you see in the news has made a lot of money on certain stocks, that does not necessarily guarantee that that run is going to continue, whether it's crypto, ETFs, or even stocks. So if you're a subscriber to the Australian, or if you are a subscriber to the AFR's Wealth Generation newsletter, you'll be able to see that there as well. And we include here a chart from the AFR Wealth Generation newsletter that we get. So make sure you take a look at that. All right, so we're about the 15-minute mark. So let's go to global. And in the global world, a lot of the talk this week was about ETF flows. So let's take a look at this first article from Bloomberg. Hopefully we can get to it. Okay, so I've hit my... I haven't got my subscription active to Bloomberg, but if you sign up, you'll be able to see that article there. I should sort that out for next week. But basically the gist of it, and if you do sign up as a subscriber to that, I think you can you can see a couple of articles for free to begin with. But I'll make sure if I include a Bloomberg article for next week, because I'm not going to go back and start the recording again for this, that I do, have that subscription sorted. I think I took a look at too many articles this month, but that's okay. The gist of it is that active managers are taking up more of the share of money, new money going to ETFs in 2021 as opposed to previously, and that more investors are making concentrated bets with discretionary asset managers. 12% of total flows have gone to active this year, even though active only takes up at the moment 4% of the market. So there is that upward trend there. So that's something definitely worth looking at. Let's jump over to the ETF Stream article, because this also talks about flows, and this one is into index funds. So investors in S&P 500, 400 and 600 index funds have saved $357 billion in 25 years. So in this article, they take a look at the rise of index investing since the turn of the millennia, and how great a tool it has been, and the benefits and saving on costs and taxes and all those kinds of fees that you would normally pay if you were to buy a lot of these holdings and individual kind of stocks that are held by these ETFs. If you try to do that, replicate that yourself, you will spend a lot of money, basically. So basically they have taken a look at what has been able to be done thanks to ETFs. There's a couple of quotes here. So the late Jack Bogle, founder of Vanguard, said that before costs, beating the market is a zero-sum game. After costs, it is a loser's game. So he was a proponent, the godfather, the founder of index style investing. He didn't necessarily like ETFs, certain types of ETFs, or maybe it was all of them. But yeah, if you think about what ETFs are, they're meant to track an index for the passive ones, and that's how they started off. So they are a bit of an homage to the godfather of index investing. In the research notes that they've got here titled Strength of Savings, Anu Ganti, Senior Director Index Investment Strategy at SPDJI, said the rise of passives has been one of the significant trends in modern financial history. Now, he points to the biannual SPIVA scorecard, which shows 94% of all large cap US managers lag the S&P 500 over the past 20 years, as at the end of 2020. Now, the thing to be mindful of is that this might seem like, and we see it in the Aussie markets as well and global markets, that it is hard to be an active manager, and passive does beat. But there are those active managers that do beat, and when they beat, they don't just track an index, they massively can outperform it, and they're built for that. The hard thing is having those consistent returns year over year over year. So if you do find a good manager, yeah, it's definitely something worth having in your portfolio. A mix of active and passive. So overall, index assets tracking the S&P 500 have surged to $5.4 trillion as at December 2020. So while the market share of passives has increased 10% in 1996 to 17% in 2020. So there is that increase more and more. And this is an article from ETF Stream. So they do a lot of stuff in ETFs in Europe, the US, and Australia. So make sure to check that one out. One here from CNBC. These are 2021's next big themes according to two top ETF managers. And they talk about hydrogen and clean living. So let's take a look at that one. All right, so there's a video that loads. We won't play that one. Don't want to get copyright struck or whatever it is. So hydrogen could be one of 2021's next big investing themes, says one top ETF manager. And they take a look at, and this is Global X, they launched their hydrogen ETF, HYDR. So easy to understand what that one would be, hydrogen. So they launched that one to go a little bit back into the history. 11 years ago, last week, we launched a lithium and battery tech ETF. Over the course of 11 years, electric vehicle sales have gone from 0% of the global auto industry to about 3% of the global auto industry, and that theme is likely to rise. With a lot of countries saying that they're going to get rid of the internal combustion engine ICE engines, ICE, over the next couple of years. So there is definitely a trend up for that. So hydrogen's the play that they've got there. And then the next one is clean living. And this article says that clean living could join clean energy as one of the 2021's top themes. And this is from Amplify ETFs. Their founder and CEO, Christian Magoon, said in the same ETF Edge interview. Amplify has seen a lot of interest in its recently launched Cleaner Living ETF, and it's got a great name as well, DTOX, Detox. So particularly from those that are also interested in ESG or environmental, social, and governance-based investing. So the firm is also preparing to launch a digital and online trading ETF that holds the likes of Coinbase, Charles Schwab, and Robinhood. So Robinhood just listed recently, so it's definitely one worth looking at. So that's the article from CNBC. So we've done 1, 2, 3. Let's take a look at this FT one. So going back to overall flows, and what was really interesting, people spoke about last year, 2020, being the year of ETFs. So let's take a look at this headline. US ETF inflows surged past 500 billion this year to eclipse 2020 record. So as of July or early August, the total amount of inflows into US ETFs has beaten all of last year. All of last year was a record. So this is a massive, massive amount. Net inflows into US listed ETFs are running at 505 billion so far this year, topping the total for 2020 by 1 billion. So that's according to CFRA Data and Research Service. Total US ETF assets under management have hit 6.6 trillion. So that is the total AUM, or funds under management. A reminder, in Australia, we hit 115.7 billion in June. So we're going to get the, it's August 5 right now that we're recording this newsletter. So by the time it is next week, probably by this time next week or maybe a few days earlier, we should have where we're going for July. And I expect that if it's between the 1 million to 2 million of inflows, that we could quite well be close to 118 million in FUM for Australia. And they take a look at the breakdown here. So equity ETFs lead the record run. We also see the same thing here as well. The majority of money goes into equity ETFs. And when you go to the homepage for ETFtracker, and you flip over from performance to FUM or inflows, it is equity ETFs followed by fixed income that lead the majority. And they see that here. So year to date in the blue. So this is a chart where it shows a bar chart, basically other assets, commodities, fixed income, equities, and then the total kind of market inflows for the year. And it shows that this year to date, what's really done well has been equity ETFs. So it's not quite double all of last year, but it's already surpassed all of last year. Fixed income is about halfway. So it's going to be a record year for 2021. So we've got still, 4 months to go, 4 or 5 months of data to come through. So it'll be really interesting to see where that goes. They also have another chart here showing Vanguard leads the way with inflows among major ETF managers. So in first spot, it's Vanguard. After that, it's BlackRock with their iShares ETFs. And then we have State Street, Invesco, Schwab, and JP Morgan. So definitely take a look at that article from the FT.com. And then we've got two more in the global list. So the first one is from The Street. So this one is titled Tuttle Files for a Short ARK ETF. And the article is about the short ARK ETF that was recently filed as a move in investment sentiment against the famed Cathie Wood-led ARK Invest Fund. More on this topic in the video section below, so further down you'll see that. But if you want to read about it, or listen to me read about it for you, basically there is a fund manager called Tuttle Capital Management. You get a video here with the famed Jim Cramer. I'm not sure if you guys know who he is, but if you watch CNBC, you will see that. So CNBC, he is always on there with his Mad Money show, a lot of sound effects. Interestingly, there was a George Clooney movie where he played a character that was based off of Jim Cramer. So for those that are interested, I'll include that in the comments. So Tuttle Capital Management just filed to launch the Tuttle Short ARK ETF, SARK, Short ARK. Its objective, just what it sounds like, it's going to use swap agreements in order to bet against the $22 billion ARK Innovation ETF, ARKK. So SARK plans on charging 0.75% annually, and basically it is one ETF betting against another ETF. So for those of you who might be against the innovation fund that Cathie Woods put together, there's been a lot of negative sentiment against it as performance has dipped, a lot of outflows that it's had. If you see that trend continuing and you want to get into an ETF that shorts it, then you can get into this SARK ETF. Or you might have a portfolio of a lot of positive technology plays, and I've seen people do things like having a short in there, so that at least that if the markets do go down, that they have some protection of their whole portfolio going down. So that's definitely something worth looking at. But yeah, nice short video here, bit about the launch, so something to look at there. And then another one was Robinhood. So that was a bit of a news story. So that fell 8% on its first day, surged another 50% in the second day. It's 100% up this week, and we've still got a day to trade. So who knows where it's going to go. But I remember reading and listening to some commentators saying that, this is just a meme thing. It's over after it fell 8%, and it's bounced back. So this article from CNBC goes into a bit more detail there about how the stock closed up to 70.39%, bringing its weekly gain to more than 100%. It did touch $85 at one point. So it opened at $38 per share to begin with. So definitely a bit of a rally there. And so they take a look a little bit later here, and we just mentioned the ARK Invest Fund. And what they're saying here is it's unclear exactly what is driving the stock higher. On Wednesday, but on Tuesday, ARK Invest Cathie Wood purchased 89,000 shares of Hood. So the Robinhood ticker is Hood, H-O-O-D. So Cathie Wood's ARK Innovation ETF has a position worth roughly $4.2 million based on Robinhood's closing price of $46.80. So the position adds to the approximately 3.15 million shares of Robinhood that the company has had since its debut. So they already bought in, and they bought in some more. So that could be part of the reason why, but there could be more. So the article goes into a bit more detail, talks about a bit of the payment for order flow. There's a lot of articles on that, the pros and the cons. There are cons definitely, but it has opened up a lot of the market to people able to get in. So I've heard both sides. It's something definitely worth looking at if you believe in Robinhood and what they're doing, or if you think that, given the fact that a lot of their money comes from payment for order flow, and that's going to be clamped down upon, very likely from the SEC, that is something worth considering. So just buyer beware out there. Okay, so in the videos, we have a continuation of the bumper week in our ETF videos. So We only listed a few of the ones that we saw below. A lot of them come from Ausbiz just because they put out so much great content in terms of ETF videos. Almost on the daily, there are ETF videos coming out. So definitely sign up. And that's free and very easy to sign up now. We also check out the Compound, and in their story, they talk about the short ARC ETF. They say that it might be more of a marketing play than anything, but it does present an interesting pair trade opportunity, as the guys there discuss. So look up pair trade. It is what I kind of mentioned before, kind of in the sense that a pair trade would be more about looking at a certain sector that you might be interested in and going long on a really popular kind of, not popular, but something that you believe is going to do really well, but also to just hedge your bet, shorting the asset or the ETF or the equity that you think is not going to do as well, because that does just protect you a little bit if things go against you either way. So definitely take a look at that. Or you can look at Investopedia. There's a lot of good information there. We might include that in future. Additionally, they mention the latest news on Bitcoin regulation with SEC Chair Gary Gensler talking about crypto and other token type products needing regulation just as much as any other security. Now, you would think that this is a negative for the potential for crypto type assets, ETFs, but actually it could be quite a positive, and they go through that. So take a look. And then additionally, we also include Kenny Polcari and his daily updates. Kenny is a good friend of mine. I've met him a couple of times thanks to work colleagues and being able to work in New York and do some stuff over there. So Kenny's a CNBC and Ausbiz market contributor in the US. He travels around, so often based in Florida, but sometimes he'll be in New York or Boston. I think he was in Tennessee this week, so definitely take a look at what his backdrop is, and you can see that there. He's a former NYSE trader, New York Stock Exchange trader, been there for 30 years. And along with his daily newsletter, you also get some cool food recipes at the end of each of his episodes. So in his newsletter, you can take a look at that. But also he's got videos now. So he puts those out on his socials. I watch them through YouTube, and I include the latest one here, but that comes out late night in Australia. So if you wake up in the morning, you can see those videos they're aimed at the US markets. When he goes on Ausbiz or whatever Australian news channel he's been on Sky News, etc. He has spoken about the close in the US. So just after market closes, he's been on here. So take a look at that. That's 14 minutes. The Ausbiz episodes. So we take, this is from Thursday going back to Monday. There was the one from 4th of August, the ETF Investor's Guide to Friday's Jobs Read in America. That was with Brad Dunn of eInvest. And then there was the August 3rd one, an opportunity for those seeking global investments. That's Darren Thompson of Equity Trustees, who just launched their own ETF. So take a look at that. And then we have another one on August 3, 3 ETFs for the growth versus value debate. And that's Alex Holmes at BetaShares. Then we have Why Buy the Amazon Dip, and James Whelan of VFS Group goes through that. And then we have Kanish from ETF Securities again. He gives his report card on the FANGs. So FANGs pass, but not with flying colors. So if you're interested in that and need to see what they've got to say, take a look at that one there. You can click on that link. And then there's another one from Damon Gozen from Van Eck on the same day. Perspective is key to investing in China. And we had a lot of that tumultuousness last week. Definitely would be interested in taking a look at that if you're a holder of any equity or ETF that has that China exposure. Now, we mentioned what the Compound was going through above, and then ETF Securities have an interesting one on their partner series, Understanding the Role of the Market Maker, and they talk with Susquehanna for that one there, so take a look. So that's videos. As you can see, there's quite a few there. We list the minutes so that just in case, if you're going to listen to the Compound and you want to do it all in one go, you need 39 minutes there, just like you would need a good bit of minutes if you're going to listen to this podcast or watch the video. All right. So in terms of podcasts, it was an interesting week. So what we saw was a bit of a podcast inception. So us appearing, ETFtracker that is, talking with Tom Performant over in Oxford in the UK. So Tom is an Aussie. He's studying over there. He is into data and he's got his own investments. He was in Livewire. I include a link to the article here. He was interviewed by Livewire founder James Marley about his small caps type of investing. And he's got an investment company called TEP Investments. So he's building up his followers on LinkedIn, and he interviewed me to talk about quite a few interesting things. So if you take a look at this, when we click on it, it goes to Spotify and it's going to show you a bit of a synopsis on the page. He probably does better than me in terms of what he puts for the episode content. I haven't done that much for mine just yet, but definitely, worth learning from others that have done it before and are doing it better in terms of the podcast. So we talk about my background, early professional experiences, a bit of my experience in investment banking, globally and overseas. Overseas and locally. And then we also do a deep dive into the ETF space and the state of analytics in equity and just other research here in the market. So something worth listening to if you've got a couple of minutes spare there. So that one goes for about 16 minutes. And then last week it was a bumper edition in terms of US markets. So ETF Prime. If you don't follow them, you definitely should take a look at that. They had a massive podcast. It was 81 minutes. They spoke with Bloomberg's Eric Balchunas on Bitcoin ETFs. They also spoke about ARK Invest and more. They talked about as well what was driving the record flows into the market, but they also take a look at what the potential headwinds that ETF flows, at least over in the US, face, and potentially here as well. So that's things like the spread of the Delta variants of COVID, further inflation debate, whether it's going to go up or is it going to stay low for a while longer, the battle of the major economies like China and the US, and they also talk about valuations as well. And that's just in the first 10 to 15 minutes. So that's definitely a lot. So after that, it's Bitcoin ETFs and then ARK Invest. So long episodes, so make sure you tune into that. You might need to take your time with that. And now a new one, which is a couple of webinars. So both featuring BetaShares. The first one is Superhero with BetaShares on the 10th of August. And that is all about the popular trading platform and ETF issuer, talking about what investors, in this webinar, ETF investors will learn how to take control and choose where their super is invested, as well as a live Q&A. So if you saw our newsletter last week, or if you're looking at the markets, you would have been aware that Superhero launched their super product. So that allows you to invest your superannuation into ETFs. So if you're interested in that, there is a live webinar being held next week. If you click on this link, it'll take you to the sign up page and you can take a look at that. And then the next BetaShares one was the quarterly economic and investment update from BetaShares. So their chief economist, David Bassanese, he discusses some of the most important investment themes emerging over the second half of this year. So definitely take a look at that one. The tweet of the week, and in this one, it comes from The Street, and that is a company that is, I think, part owned or wholly owned by Jim Cramer, who we mentioned before. We saw up in the CNBC link before. But in this tweet that they've got, and we include the link and also an image here, they show the top performing ETFs in the US for the month of July. So definitely take a look at that if you are a ETF investor in the US markets. And we get to the chart of the week, and this one comes as a screen grab from the compound video and podcast that we list above. It shows the maximum drawdowns investors would have had each year if they had been long-term buyers and holders of Amazon stock from inception, so pre-2000, holding that until now. And what we can see on the chart here is the percentage change, the intra-year maximum drawdown. In some years it's 47%, in some years it's 59%, it's even 83% in the year 2000. In more recent years, last year it was 13%, it was 23% the year before. These are the maximum amount. If you were to hold the stock, how much would you have seen it go down in a point in time? That could have been for a month, 2 months, whatever it was, until it bounced back up. And obviously the share price for Amazon is much higher than where it was since inception. But if you are going to buy and hold, this is just showing you that you are going to feel pain if you are caring about the rising and falling of these stocks. So investors obviously would have made much more than these losses, but they would have needed the emotional and mental fortitude to stick it out. So this chart comes out at around the 26-minute mark in that video. So take a look. And obviously they will discuss that in the video in more detail and probably a lot more thought than I have on this. And then there's further ETF education. So in this one, there's another webinar that's actually coming up, and I should have included this in the further one up above, but actually, I think it sits more in the ETF education. So this is an introduction to exchange traded funds from BetaShares. So they're just coming out with a lot of content. They talk about the different types of exchange traded products, ETPs. So there's passive versus active. There's Australian and international shares. There are sectors and thematics. There is leveraged and there's hedging. And there's plenty more. So definitely check it out. And there's a registration form with a link here. And then we get to the ETFtracker app. So you can check out the app if you are subscribed, or if you just go to the ETFtracker page, you don't actually have to subscribe. I'm going to put that behind a subscription page, so it's only for members, but it is free. So, just make sure that you do subscribe, because if you become a member, you get notified of some cool things rather than just waiting for when the next thing drops, or when the next time that you actually come to the page. So if you become a member, you get those updates in your inbox. We also have the ETFtracker forum, and what I thought I would highlight was that we've been getting, this has just only come out in the last couple of weeks, but we've started to get a few messages about analyzing ETFs and portfolio reviews. So what I thought I'd show is an example. We had a request for something from DJRE, the DJRE ETF, and so we took a look at property related ETFs. So this is a link to the forum post where we answer that viewer question, and below you can see the type of analysis that we've been able to do, or how you can take a look at that analysis and do it yourself within ETFtracker. And then finally, we're on the ETFtracker socials, and below is an example of the YouTube video that we had last week. But you can follow us on YouTube, Spotify, Instagram, Twitter, TikTok, and LinkedIn. So it is a little bit full there, but just in case any one of those are your favorite, we are doing quite wide coverage, so make sure you take a look at that. And yeah, just if you are interested in the ETFtracker app, or you're interested in the newsletter, or you've got friends that are interested in all of this kind of stuff, make sure that you like, subscribe, share, and just please share the love. I'm Mark. I'm from ETFtracker. I've been your host, and happy Friday. Happy investing.